Senior set the team.
You want to do the intro this time?
Yeah, I got it. All right.
Let's see.
Ready?
Yeah, I'm ready.
Ready for that fire?
I'm ready.
Ladies and gentlemen, welcome back to another episode of Chart Talk with myself, Shake as the host, and Bennett on the other side. This is my first time doing the introduction, and it's really awkward. Let's jump into the market outlook. All right, so very interesting last 2 days. I love these environments. It's so much fun out here every day. Every day there's so much action. We had this crazy 2-day move. We walked in yesterday, and I'm not going to lie, you can read the shakedown and everything. I thought we had more downside ahead walking right into the week. I was thinking short on the brain. Then I walked into a 4% gap up Monday, and immediately I'm changing my thinking. I know that hypothesis was wrong. So I waited off the open yesterday. I got a little bit long. And we had a sick 2-day move. And then today, we open up again 4%, and we pretty much fade that move the entire day. So now we have a new trading range on our hands where it's, down to this 244, but it really goes to the lows of 218. And now today's high, 275. That becomes very important resistance in the market. So we're in this super wide range, and we're just going to stay in this volatility for a little bit. Is the bottom in? I don't know. All these things. People ask the wrong questions in these environments. We got to worry about day by day. So just really interesting price action. This morning when we were gapping up again and we were up 10% in 2 days, the FOMO crowd, you could hear them screaming, and the bulls started beating their chest again, and then the bears won today. So we're just seeing this back and forth action every day. It's just stay on your toes, stay flexible out here. What are you thinking?
I think if you could pull up the chart that I sent you, the SPY chart, I think I can do a quick little summary. And again, it goes very similar to what you have. So I drew out these three little
range. Okay, sorry.
Yeah, so we have this, off lows. We're 25% off those recent lows, and even like we saw in the chat today, a lot of those guys were much more enthusiastic looking to buy today because it was so easy. But usually that's the opposite.
Right.
So we're starting to see that, when we get near these 270 area, that's like when the cocky crowd comes in, when unfortunately there's not much opportunity anymore because the names have already moved so dramatically. The SPY moved 25%. Look at individual names that are up, 30, 40, 50%. So these are the times where, even for me, the names that I've been trapped in through this down move that I've been selling into and getting out of because, everyone wants at B bottom, and when everyone wants it, we really get it. So just in this range, this 220, 275, up here, 260, 275, in that area, I'll be looking to sell more. And then if we pull back into this range, I'll be looking to buy in that green zone. So that's my...
Yeah, I couldn't agree more. And something I noticed in the chat today, it's like the guys who killed yesterday, they were pretty quiet. They were ready to take some profit. And the guys who weren't able to, because we gapped up 4%, and normally Monday gap ups are often filled, but we only came down. We only came down maybe 1% off of that gap up before we started rising once again yesterday. So it was tough to buy. But if you did buy that, you got handsomely rewarded with this 2-day move, and you could sell some off the open today. And then, but I saw the guys who did not take advantage yesterday tried to buy this 275 today, and those are the ones who got hurt. So it's you see the emotions, of the chat, and just traders everywhere. When people are scared, that's when you got to look to buy. When people are getting cocky, that's when you got to look to sell. And that, and just keep it tight right now. We're still in a bear market. I don't care what the percentage is or, all that BS that everyone wants. Oh, we're up 20% off lows, so we're not in a bear market. When we're seeing the market go up and down 10% in these 2-day spans, that's just bear market qualities. So as long as we're doing that, I'm gonna stick to the short-term trades and really just take it day by day, stay super flexible. And I like your chart. That's pretty much a pictorial representation of exactly what I was trying to explain there too.
Yeah, and one last little things we're starting to see. We're getting these 3 to 4 day moves. We're getting 4 days up, 3 days down, 4 days up, 4 days up, a couple days down. So when the broad market's the third or fourth day up, and that's when you're looking to buy, you're probably walking into more of a disaster than what you really want to happen.
Yeah.
So, all right, with that, I think we can jump into some of the member ideas.
Yeah.
All right. First up, we got Tom Van Meter looking at this FSLY.
Fastly, huh?
Yeah, through 21, 21, 22.
Nah, I mean, nothing there yet. This one, I mean, had that nice little 4-day move. If anything, buy off that 17 type thing. But I'm sure it was looking a lot better when he submitted this earlier in the day. We're probably going to see a lot of things like that with the market action today, where everything was looking good coming into today, and then we got that huge sell-off. Not even a huge sell-off, just a fade. We closed flat. But it's painful if you're up 4% on the day and you just fade it all the way back. What we got next?
The second name on his radar was IR through 26.
I think all right. So I like the setup where he's trying to buy off these lows. The problem is this just came way too much. See how it went from 17 to 26, 26.50. This resistance area. If he's looking to buy these type setups, closer to the bottom, then yeah. But this one is just too. It's the range is too wide, and he's buying at the top end of the range right now. So another pass.
Yeah. Yarden had some questions for you regarding, some of your day trading strategies or setups that you look for in this, much faster environment.
Just in general?
Yeah, just very broad.
Just the most general question. So,
yeah,
I mean, every day I'm going to have a basket of names that I'm looking to trade, that I'm looking for intraday setups. The trades that have been working best have been buying things on dips into support. We haven't been shorting into resistance. I don't have a ton of success with that for the most part, so I'm not going to go there with it. But for the most part, it's been waiting out and finding out your favorite name when it comes into a support zone or something. Like I have Microsoft up right now, and like buying it into the support, seeing it retrace on the way back up. I had a really good trade in this Go that I'll get into that later though.
Okay. And next we got John Klein. He had a few questions regarding 401k. So the first one, if you want, Jake, I'll just take these really quick. First one was, what do you recommend for your 401k allocation in regards to rebalancing? Right now, for virtually every person who has a 401k, you're more than likely holding significant losses relative to what your 401k was a few months ago. So trying to rebalance now is just really just realizing losses. So you're more often just leaving it as is and not really changing it. Regarding adding like emerging market exposure was another one of the questions. For most people, and again, it's very hard to give very broad 401k advice, but at least like for someone like myself, I'm going to have just pretty much all this, everything in the SPY. Whatever the lowest cost mutual fund that's offered through the 401k plan, that's usually your easiest bet. You're going to continue to dollar cost average through the pull-ins, through the market rising, and that's just the easiest, most simplest way to do it. Trying to get more complicated and trying to rebalance in that account. Again, if you don't do this every single day, meaning that you're not actively trading the markets and you try to just kind of ad hoc do what you're doing the 401k, it's going to probably be more damage than necessary. So just try to keep it as simple as possible.
Emerging markets are probably going to get smoked until we find a true bottom in U.S. stocks. You got to figure those are much more liable to get crushed. I'm staying away from those for now. Yeah,
it's like emerging markets, Europe, all that, anything China. And again, for most 401k plans, you're not going to have like, most plans won't have specific countries. They'll have like one emerging market fund. But again, for most people, it's probably easiest just to just buy the SPY or buy the lowest cost, broad market fund and just kind of keeping it that way versus trying to continue to rebalance, because then you're going to just check the account too much. And I just see people doing too much with those accounts when you're just better off just leaving them.
Yeah, I was just thinking from a theoretical standpoint with emerging markets. I mean, if you want to look at the comparison between small business and big business in the USA, obviously in this quarantine situation, big business is going to get hurt, but they're going to survive much more. Whereas, the small businesses who are going month to month, a lot of them are probably going to go under and go out of business. And that's kind of how I'm looking at economies, where it's like the U.S. economy, we'll get hit in the short term, but we'll recover the most quickly. Whereas emerging markets, I feel like they got a lot more pain ahead than the U.S. market does.
And that's even if you pull up like VWO, that's like a quick, it's a Vanguard ETF for the emerging markets. And again, you're probably not going to be able to buy this in your 401k.
Doesn't even populate here.
Yeah, so we'll keep going. John Klein, keep your 401k simple. Huh. Andy was asking about dollar cost averaging, specifically regarding Boeing. He got in.
Can I? God, fuck Boeing. What's the obsession with Boeing? Someone tell me the obsession with Boeing. All this company does is lie about people, lie about their safety precautions so that they kill people. Okay, you can take this question. I don't want to even look at Boeing.
Okay. So again, for Andy, he was in from 125, I think 120. He's up like 20%, and he's asking, more or less, should he be adding dollar cost averaging weekly, or should he be finding specific entries and taking it that route? For me, again, it's a little bit of both. For the broader markets, I'm going to be buying those every single week. I don't necessarily care where they're trading because the SPY isn't going to go to zero. When it comes to an individual name, though, if you just blindly bought BA every single week for the last month, you're definitely getting destroyed. So you have to do, especially for individual names, a little bit of both, where you want to be looking to consistently add to that name. Say if you want to have $10,000 worth of Boeing, don't buy $10,000 worth the first day that it sets up. Buy $1,000 worth of Boeing, and then a week or 2 weeks later, if something sets up, you buy another 1,000, and you keep building into that position until you have, the amount that you were looking to have when you started. And also, again, if you know how to read charts, something like Boeing, you want to find little spots where you can get into it, not just blindly buying. And again, that's more of something that comes with feel and experience. So, Andy, hopefully that helped a little bit. Next, Jake, we got this one for you. This is for Nicholas. This is this DDOG.
D-Dog?
Yeah, through
dog. It's been a dirty dog.
The 37. He's looking at it.
Yeah, I mean, all right. So this one, I'm perplexed about this name because we've been watching this kind of bottom develop here, but it just hasn't been able to push up at all. So maybe it's just still flagging. I'm wondering though if it's soon just going to fail and just flush because it's had every opportunity to push up and it's had market help and all this. But I'm going to continue to watch it. I'm flexible. I think it could go both ways in this spot. It could definitely break these 37 highs and run eventually. I'm not sure. It's just kind of stuck down here for now. But we've been watching this thing every day. It hasn't done anything. So still watching it. I don't know.
All right.
I don't have any expert advice there.
Yeah, I think it's same like I said. I think either way, it's like if it also kind of showing you like a little bit of that about that H starting to form.
That's what I'm looking at right now.
Yeah.
It's like it can't push up from this area. It's technically, it's just it gapped down. Whatever this was, March 9th, and it hasn't been able to push above this first resistance zone. It's had a lot of opportunity. So you wonder if it's in this base too long, and it's going to be failing soon.
Yeah. Next, we got Mike Galla looking at this IOVA.
IOVA. Hello. What? He just threw 32, or
he was looking at 30, but again, he sent it earlier today before it kind of broke through that level.
So this is very interesting. I like this huge green day. It's definitely a biotech. You can tell just by looking at the chart. And I like how the trading is still in between this massive green day right here, this high volume day. So it could definitely tighten up a bit. But this one is the best chart we've looked at so far in my eyes. The highest probability of going higher so far is this IOVA. I like the action. I like the consolidated action since this big green day. So I'll keep that on the list. Looks pretty good.
And then next is this LLY through 145.
This is tricky. So I just think with today's market action, we have to think that we're going to get some more downside. Now that we're at the top end of that resistance range, so I think this one pulls in and gives you another. I'd rather these names buy them on the dip. If it pulls into this 130, 132, 133 area, it's much easier than buying through highs. Buying through highs right now is so difficult because you need that huge market reaction like we had yesterday, but you can't count on it every day. So,
yeah.
I like it on a pullback much more than I like it through 145. Breakouts is going to get you killed in this environment.
Yeah, especially just how much it's bounced, in the last 2 weeks. And then last up for him was his REYN through 31.
What is it?
REYN.
Oh, I had something else. I don't even know this company. Let me see the volume. It does decent volume. Through highs, I mean, IPOs through highs are always a good trade. Reynolds Consumer Products. Through highs, see if it tightens up and flags out a bit. Definitely not bad. It's decent. I'll keep an eye on it. Just haven't typed his name up before.
Next up, we got Tyler Kenny, who's asking, Again, this is more directed at you, Shake. Like earlier today, you mentioned like the short squeeze. So he was asking, what do you mean by a short squeeze? What do you mean when you mentioned short float? How does that translate to the stock? The stock rising in price.
Gotcha. Yeah. So so we see the reason that bear markets have such dramatic moves is because we see such a higher percentage of people are going to be short the broad market or short an individual stock. And that's why we got a rally like yesterday where it was like me and I'm sure a lot more people with the way we closed and the action from last week thinking that we hit this resistance here in the 262. I was expecting more downside. So I'm sure there was a lot of funds and shit out there that also expected downside and they got short. But then when they saw how strong the market was, they have to cover their position. And in covering their position, they have to buy the stock. So a short squeeze is buyers buying the stock and then shorts covering their position and buying the stock. You get double buying, if you will. So that's a short squeeze. We'll talk about that crowd, CRWD, as far as short float goes when good trade, bad trade comes around.
Okay. Next up, we're going to switch to some of the social media questions. This was from Luca _ Branduri, and he was asking about Walmart through 126.
Nah, Walmart just came too far. Again, another one like that LLY. It's like one of these consumer staples where I like the company in this environment. People will definitely be going to Walmart every chance they get, but I don't want to buy through highs. I want to buy on a dip, on a reversal. If this comes down to 116, that's a beauty. That's a beauty support area. See, it was resistance, and then that was the spot to get long. If it comes back and holds this 116 area, that's the spot you want to look to buy. So I like the name, but I don't like anything through highs right now.
The next up, we got Adian Goodman, and his question is, what are the best stocks to invest in as a beginner?
You got it.
So, Adian, you should not be investing if you're a beginner. There's no like safe stock that you're going to buy and not lose money in.
Luck and coffee.
Yeah. So you're really, if it's like gun to my head, the easiest thing is you just buy the SPY. But again, if you start picking individual names, you're just going to at some point lose money or just create horrible habits. If you're asking the best thing to invest in, pick up a couple books, start reading, educate yourself. That's probably going to help you a lot more than just blindly buying whatever stock you think is going to go up. So with that, we covered up the social media questions. If you want, Jake, we could jump into good trade, bad trade.
Yeah, I'll start. So, all right, so let's talk about this crowd, CRWD. CrowdStrike, cybersecurity name. So, this name has the 30% short float. So what we look for out of these names is when I want to see it break out, I want to see an influx of volume. I want to see far side confirmation, which means, so we're looking to buy this 60 area. I want to see huge volume above 60 as the stock just rages. That's what I'm looking for in these short squeeze. So this is kind of where my job becomes tough, being a day trader in this environment. So we can all see this 60 resistance level. And I'm in this trade yesterday. I'm just straight tape reading it. So I'm going to get my little dots up here. All right, so we got that price point. That's $60 that we wanted to see. So off the open yesterday, we see this 60 be huge resistance, and I'm seeing this seller on the tape. He's sitting there refreshing off on the offer, sitting there refreshing stock at $60. Then he's letting the stock go a bit. He's refreshing at 60.20, 60.30, and he's stopping it at 60.40. And it's not going much higher than 60.40. And if you look at the broad range, the top of it was really 60.50. So we see 60.50 finally break after all morning, back and forth. And I'm sitting there buying the shit out of this flag. I end up buying like 4,000 shares with like a 30, 40, 50 cent stop. Something where it's like, I need to see this thing go right now or I got to get the fuck out because I don't want to give this the entire day's range. But if it goes, I'm going to get so fucking paid. So this is where my job becomes tough. It breaks that 60.50 and I'm trying to call out all the tape reading and all that stuff like, oh, seller lifted. Past 60.50 should be go time. Doesn't go. So I give it a few huffs. I give it 5 minutes. Where normally, this was my actual one mistake in the trade personally. I should have, once that 60.50 broke and came right back, that's when I should have just marketed out of all my stock. You could see I waited like 5, maybe 7 minutes after, and I got out a lot of stock, break even. I lost like $600, but I had 4,000 shares. So it's like, in a name that goes up and down $4 a day. So I take that as a break even loss. But so I let it huff a bit. I gave it a minute to go after that 60-50. Once it doesn't go in that moment, I'm going to give up on it. I'm going to let it go. I don't want to give it to the bottom, the low of day, the 58.50. That would have been over $2 risk, something like that. But that's just something, we've learned back in the day at the prop firm, the day trading stuff, where it's like I can't teach that. So it's so tough on me in the chat because I got out, and later in the day it went higher than what I got out at. It just eventually failed. So like I know that when I'm getting out of this stock, that it could still go without me, but it didn't go in the time frame that I needed it to. I needed to see those buyers beat that seller up right there, and I needed to see it break out then, like that in that moment. Since it didn't do that, I got right out because I don't want to give the 4,000 shares $2. It would be $8,000 loss. I got out for $600, So that's where my job gets tough, where it's like I'm not sure what should I tell everyone I'm getting out of this name because I didn't see the seller lift quick enough, but the name is still technically fine. So that's a little tricky on my end. But what I was looking for this crowd was the short squeeze where it breaks the 60-50 and just starts absolutely raging. But we didn't get that, so I got out. My good trade this week was this Geo, and I love this trade setup. This was one I was telling you about. This one I made this trade of the week early March when the markets first started selling off. We see on the daily this really nice base here at 36, and what they do, they're a discount grocery store. So if a company like overproduces, Campbell Soup overproduces their soup, they're going to sell it to GO for really cheap, and GO sells, they're like a budget Costco. So during a time like this with the pandemic, this just makes total sense to me. Now that I have the chart coming with me, the technical aspect, that's like an A+ setup for this time. So I put on some risk for this name. So I bought this 35.50, the daily flag first. Here's where I got 4,000. Then we see the 6,000. I mean the 36 resistance. That's where I got up to 6,000 shares. That was the macro resistance. We had this refreshing seller on the offer. It was a thing of beauty once he broke. I sold some 37 quarter, and we got a nice movement to 38.50 today. And I'm just holding the stock now. Now I got a great trade on my hands. This is the first name I've swung in since this whole thing started. So it looks decent. It's not really as connected to the indices as most other names are. So I like it a lot. But we'll see. First name I've swung in a while. A little nervous. What do you got? What are you trading?
So I got two. If you want to pull up IDXX first, we'll go over that one.
Got it.
All right. So again, for a lot of new traders and even experienced traders, people will get trapped when you're holding names, especially when no one sees this coming. So I think these two are kind of good relative examples of being stuck through this market pullback. So we can see in this IDXX, we can see I drew the horizontal line to 290. That was the macro level that we were keeping an eye on to buy this name eventually up through it. Before we had this crazy correction, I was looking to buy inverse 260. I was too early. Gap down, came back up again, and I looked to add. Now that's the beginning of the trade. In that range at 240, 240 to 290 range was the range that the stock is always traded in before we walked into the bear market that everyone's aware of now. So I got trapped in this name where I didn't really have a stop in, and I got stuck sitting through this massive drop, this 35% drop. Now, for most people, if it's the first time kind of going through this, they're not used to holding names through these bigger pullbacks, they'll try to panic out and just blow the market out. I've seen this before a couple times. I knew it's a $300 name. It's not going to go to zero. It's not going to go to $50. Like I have to just kind of sit with it and be patient. It bottomed out, and it V-bottomed right back to basically my cost basis in the last couple of days. And once I saw today, this thing gap up into 260, seeing how extended this name came in this last couple of weeks, up almost $90 off lows. This was like a perfect gift for me to get out of a name that I was trapped in for basically break even or a little bit of a loss. I'm not really sure whether if I made money or not between my cost basis, but
you didn't lose 35% though.
Did not lose 35%. Did not make money. So this is a difficult part where it's I can't expect to make 5-1 on 35% risk, but this is one where I was given the opportunity to get out of this name and move on, and that was the gift. So it was a bad trade, but I didn't necessarily lose money in it. But I didn't take advantage of trying to dollar cost average on the way back up. So that was the bigger mistake, other than obviously having to do that drop. So that's one where you can get beat up in a name, but if you can be patient with it and let it turn, and it gives you that opportunity to get out, you can. And then This PFPT, again, similar story. And Jake, just let me know when you have it up.
Got it up.
All right. So again, very similar story from from the chart. This PFPT, we see this macro level through 130 that we were looking to buy through. The name got pulled back down into support, and I looked to buy back up through 110, which was that first green circle. Again, same story. Got trapped in this bear market that we didn't really see coming as far as it did. But the one good thing was after that gap down, and it gapped down again and ripped up higher, I was willing to buy up through that gap up high versus the low. So for this, for IDXX, I didn't take advantage of the lower prices because again, we try to avoid dollar cost averaging on the way down because it can be very difficult. We try to dollar cost average on the way up. But this one I did take advantage of that, of picking up a little bit better stock. It ran into that 112 very quickly and just started to chop around. And again, today we saw this crazy 3-day move back into that resistance again. And this name is just going to take some time where 2 days ago it was below 100. Today it's at 100, 112, 113, and I can get out of this stock that I got too early for basically break even and then make 13, 14% on that ad. These were especially given where the market was, this was like a big flashing sign where go through all the names that I'm kind of stuck in and the ones that I can get out of and free up some cash. That's what I want to do. So if these names pull back down, I can get back in. If not, I can move on to other names. So that was the big thing for me was, some of these names that I've been in for a bit through this drop, today was a good chance for me to get out of some of these names that I didn't care about. I don't really care about Proofpoint. I don't care about IDXX. These were just trades. These weren't names that I really cared about holding. So I was able to get out of some for, break even or a little bit of money made versus panicking out into those lows. So those are the main lessons for me for this past week.
Question.
Mm-hmm.
Are there any names you do care about?
So, and right now, today, no. But again, the names like American Express, UTX, a lot of the Dow 30 names have been my big focus. But again, when American Express was at $70 3 days ago, and now it's at 100, I can't look to buy it at 100 today. Right. So a lot of these names, it's when they start to pull back in, like in that the first chart we showed the SPY, when we get back into that orange, green, that orange zone, I'll start to look much closer. The green's going to look to buy up, but I can't be looking to buy these names when they're up 20, 30% in 3 days. I just like being trapped in those names. I know those are the price where I'm trying to get out. I don't want to be getting in at those prices.
Right. I think context is so important right now. It's like, yeah, I like AXP, but I only like it on a huge sell-off. I don't like it. So it's like people that came in today ready to buy when we're at SPY 275. When we closed Friday, SPY 248. It's like you got to put everything into context. Like, what do you like? We just made a 10% move. You can't. It's tough to try to make money long at that point. I think you just gotta think to yourself, I missed the move. I should just be hands off right now. Type deal. I don't know. I'm just trying to get people to think a little bit more out here.
I definitely agree. I think this is a time where you got to really find the names you really like and you really want to get. And there's no disadvantage or nothing wrong with being patient or being in cash. And I've seen it more now where people are trying to force trades where they have to be in something, where 3 months ago there was never this big rush. People were willing to sit in cash and not even care about it. But now that things are moving so drastically, the more inexperienced people I'm seeing where they're like, I need to buy something right now. And it's like, why? Like, what do you want to buy? Like, I don't know. It's like, okay, well, probably not a good idea.
I had to talk so many people out of that. When we were down Friday, I was getting messages and stuff from people who were just like, I just need to buy something. I'm like, well, what's your plan? Like all this stuff. And it's almost like logical thought kind of went out the window and people were much more manic about, I have to buy something now. I have to trade right now. I don't know. It's just kind of funny to see where it's like, this is like a really shitty environment. You should be doing less if you don't know what's going on than, trying to catch every move, trying to be the perfect trader, trying to be the beast volatility trader. I'm going to be out here day trading every day. I find there's a lot of opportunity here. But if you're new and you're just losing money, it's just like, take your foot off the gas, man. Just sit back and learn. You don't need to do it all right now.
Yeah, and that was something, even when I think back of, last year when we had a little bit of a tougher market, and then even now, it's just that, you don't have to be in something all the time.
Right.
So you got to be, a little bit more patient.
Right. So for me, exactly, this is the perfect example. It's like I saw the market gap up yesterday and looked to go for a continuation. So I tried to buy that crowd. I got out, and then I bought that go. and I have some decent stock. But then I walked in today like, there's no way in fucking hell you could get me to buy anything. I don't want to short up here. It would have been the move, hindsight 2020. But I just looked at the context of it. All right, we're up from 10% from Friday's close in 6 hours of trading, 6.5 hours of trading. There's nothing to do right now. So it's like I had my opportunity yesterday. I took it. And then I saw where we were at today. And it was like, there's nothing to do. So it's just like feeling the ebbs and flows of it. That obviously comes with time, but there's just not a great rush to do so much right now is all I want to convey.
Yeah, there's and again, going back to what a lot of those new traders were, it's like you said, like they want to buy something, but they don't know what they want to buy. This is a time where you're doing more research. You should be, you should just be scanning the Dow, scanning all the major sectors, scanning the S&P every single day, scan the NASDAQ 100, and this should, regardless of where the market is, that should just be the your daily process of going through those names if you do like to trade and invest in the market. And for right now, I can look through. I did even on this chat. I looked through every Dow name. I looked through every S&P, and I'm like stretching for names, which are just saying like there isn't opportunities right this moment.
Right.
But if I keep repeating this process, I'm going to find opportunities at some point.
Right.
But you just got to it's got to be a consistent process. You can't just okay, today we're up, I got to buy something. We're down tomorrow, I got to sell something. It's got to be repetitive process. So with that, I think we can jump into book of the week. Oh no, I'm sorry, top idea of the week.
Top idea, but I have nothing in this range. I was going to try to force it, but in this range, I have nothing. If we get a pullback, maybe I'll look to buy something that comes into support. But I think with today's action, now we're just dead in the middle of a range after a huge move. We want to see this 263, 264 area in SPY show some sort of support, but we can just rip through that and slice and move lower. So we're in such a huge range. It's like I don't think there's much to do right now in this second. I'm going to still be typing up a ton of names, but I don't have anything I'm super in love with at all.
Yeah, even for me, my main thing is, for the guys who do try to hold longer term or who hold names or have held names, through a loss recently, this is a chance where if it's near your price, marginally above it, maybe you're down 1 or 2% versus maybe a month ago you were down 15, 20 or more. These are kind of those gifts to get out of some stock, raise some cash, and then when things do pull back and you get a little bit scared, that's the time to kind of put that money back to work. So that's my just broader idea that for this week, or specifically today, it was just to free up cash, where I was able to. So with that,
same.
No, that just like it's free up some cash. Yeah. With that, you want to jump into book of the week?
All right, let's jump in.
All right, let's do it.
All right, so my book of the week, I'm like 75% sure I've said this one already. I just started rereading it again though. Black Edge, the Steve Cohen. Billions owes Stevie Cohen a massive check. The first season of Billions is literally the story of how they caught Stevie Cohen and made him turn into a family office with the pharmaceuticals trade. It's really funny. But the reason I started rereading this is because, fucking Luckin Coffee, who got stuck in it? I got stuck in it. You know who else got stuck in it? Stevie Cohen, my dude. So I started rereading the book. Great book. He's like the prop trading god, so he's my god. But it's a classic. It goes through his whole story and how much insider trading he used to do and all that. There's a funny story I just heard. I'm listening to the audiobook as I trade with it. 1987 crash happens, and he looks at the rest of his desk. He's just like leading a desk at this point. He goes, "None of you are traders anymore. You're all my clerks. I'm the only trader on the desk. Just take my orders." That's the kind of guy he is. He's a no-nonsense, I'm the best trader in the world, you're not type guy. I got nothing but respect for him. What do you got?
I think I'm not sure if we did this one last week or 2 weeks ago. One Up on Wall Street. The book I'm reading right now is definitely not for this one. But
Peter Lynch.
Peter Lynch, yeah. But I have a few funny, quick little lines that I think are very relative. So one of the pages, he goes, "I think if you decide that a certain amount you've invested in the stock market will always be invested in the market, you'll save yourself a lot of missed moves and general agony," which is something that we've seen tremendously in this last month, where everyone was trying to get in a couple months ago, everyone trying to get out now, and they're just trying to time it and be too perfect. Where I think this is like that one line was very, very relative. Another one was, people seem to be more comfortable investing in something that they are entirely ignorant of, which is an unwritten Wall Street rule. If you don't understand it, put your life savings in it. And that's, even for me, for PIPT and IDXX, it's like, I don't really know those names. I don't really care. I'll get out of them.
Cybersecurity.
Yeah. Another one, the last one, let's see here. let's see. Small investors tend to be pessimistic and optimistic at precisely the wrong times. So it's self-defeating to try to invest in markets and get out of bad ones. Same thing,
So small investors are love the market at highs, hate it at lows.
Yeah, it's just whatever they want to do is just the opposite. A la theory.
Yeah.
And then the last one,
El
again,
Prez.
these are all, yeah, oh my God, to the max. These are all very relative to what we're going through. So even the last one I have is the second there is during the collapse, drops, burps, hiccups, free falls in the market. These tend to happen every few years. If you summon the courage and presence of mind to buy these during the scary episodes when your stomach says sell, you'll find opportunities that you wouldn't have been able to see otherwise. Professionals are often too busy to find these. And this is where I try to use that example in the chart where it was like the green, everyone wants to buy, everyone's confident. The red, everyone's cowardly and scared. When if you can, buy in those scary times and sell in the good ones, you'll make money. But again, much easier said than done. So
right, we gotta condition everyone in the chat when we make these 10-15% runs to highs. That is not the time to buy. It's time to take profits. It's time to take the foot off the gas. Time to buy is when it's more difficult.
And this was one thing going off that. And for the guys who've been in the chat for a couple of years, like Mo and Chris and those guys who've been in, who remember 2017, we were in a similar market where we were breaking to new all-time highs. Everyone thought the next high was the new high, and this was SPY 220 to 260, and that took us over a year to go from 220 to 260. When in the last week we've gone from 220 to 260, the same point move, which that was a year worth of trading, which has been compressed into a week's worth of trading. So these are those things where it's like we're like watching a movie 10, fast forward times 10x, and that in a week span, just because how fast the market's moving. So with that, I think we wrapped everything up for this chart talk.
All right, let's wrap that thing up.
All right, we're done.
All right, till next time.
Yeah, till next time.